Welcome to the deep dive. Today we're tackling something really crucial. IRS Publication 519, the U.S. Tax Guide for Aliens. Our mission, to cut through all the noise and give you the absolute essentials for figuring out your U.S. tax residency.
Yeah, it's fundamental because for anyone who isn't a U.S. citizen, this one thing, resident alien or non-resident alien, RA or NRA, changes absolutely everything.
Everything how, like what income gets taxed.
Exactly. What income, how you file, which forms the whole picture. If you're an RA, think like a U.S. citizen.
Yeah.
Worldwide income is on the table, NRA. Generally, it's just U.S. source income. Getting this right is, well, it's step one for everything else.
Okay, so high stakes. The good news you mentioned is there's a default.
Right. You start as a non-resident alien unless you meet one of two specific tests.
Let's break those down. Which one's first?
The easiest one is the green card test. It's pretty straightforward. If you are a lawful permanent resident, meaning you have a green card, that Form I-5501 at any point, even one day during the calendar year, then boom, you're a resident alien for tax purposes for that year.
No counting days, no math.
Nope. That status alone settles it, clean and simple.
All right, but what if you don't have a green card? That's where it gets tricky, I mentioned.
That's when we hit the second test, the substantial presence test, the SPT. And yes, this one involves some math.
Okay, lay it on us. What's the formula?
It's a two-parter. First, you need to be physically present in the U.S. for at least 31 days during the current year. Let's say we're talking about 2024. So 31 days minimum in 2024.
31 days seems low.
It is, but that's just the first hurdle. The second part is the kicker. You also need 183 days of presence during a 3-year look-back period.
3 years, so 2024, 2023, and 2022.
Exactly. But you don't just add up the days equally. There's a weighting system.
Ah, okay. How does that work?
You take 100% of your days in the current year, 2024, then you add 1/3 of your days from the previous year, 2023, and finally you add 1/6 of your days from 2 years back, 2022.
So wait, let me get this straight.
Huh.
I could be here only, say, 40 days this year, but if I spend a lot of time here in the last 2 years, that formula could still tip me over 183.
Precisely. That weighted total 2024 days plus 1/3 of 2023 plus 1/6 of 2022, if that hits 183 or more, and you met the 31-day test for 2024, then you meet the substantial presence test. You're generally an RA.
Wow, okay. That's definitely more complex.
Like
And what counts as being in the U.S. for this test? Just the 50 states?
Mostly, yes. The 50 states, the District of Columbia, U.S. territorial waters, and even the seabed and subsoil next to those waters.
Well, it doesn't count.
Importantly, U.S. territories like Puerto Rico, Guam, the U.S. Virgin Islands, days there don't count. And just flying through U.S. airspace doesn't count either. You have to be physically on U.S. soil or in its waters.
Got it. Now, are there days spent physically here that we can actually ignore for the SPT?
No.
Like exceptions?
Yes, absolutely. And these are crucial. There's a list of days that don't count towards that 183-day calculation, even if you are physically present.
Okay, what are some big ones?
Commuting days. If you live in Canada or Mexico and regularly commute to work in the U.S.,
How regular is regular?
the rule is more than 75% of your workdays in the U.S. must be commuting days. The IRS example uses Maria Perez. She commuted 69 out of 76 workdays. That's over 90%, way above the threshold. So all 69 of those days are excluded from her SPT count.
Okay, commuting days. What else?
Days you're just in transit between two foreign points, provided it's less than 24 hours. But careful here. If you stop for a business meeting during that transit, the day counts.
A little trapped there.
Definitely. Also excluded days as a regular crew member on a foreign ship or vessel, and importantly, days you couldn't leave the U.S. because of a medical condition that started while you were here.
That medical one seems fair. And didn't you mention something about students and scholars earlier? Exempt individuals.
Yes, that's a huge category. People on certain visas, typically F, J, M, or Q visas, like students, researchers, trainees, their days in the U.S. are often completely excluded from the SPT calculation for a certain period. We definitely need to circle back to that group.
Okay, we will.
No.
But first, what if someone does the math, hits the 183 weighted days, but feels like, hey, my life, my home, it's really back in my home country. Is there any way out?
There is. It's called the closer connection exception. It's like an escape hatch from the SPT.
How does that work?
Even if you meet the SPT, you can still be treated as a non-resident alien if 3 conditions are met. 1, you are present in the U.S. for fewer than 183 days in the current year, 2024.
Okay, less than half the year physically present this year.
Right. 2, you maintained a tax home in a foreign country during the year. And 3, you had a closer connection to that foreign country than to the U.S. throughout the year. Think family, home, social ties, business connections.
That sounds like a judgment call, but how do you prove it to the IRS?
Documentation is key. You must file Form 8840, Closer Connection Exception Statement. You attach it to your tax return if you're filing one.
And if you don't have enough income to require filing a return?
You still need to file Form 8840 by itself. Mail it to the IRS Service Center in Austin, Texas, by the tax filing deadline. If you fail to file this form on time, you lose the exception. Period. You default back to being a resident alien based on the SBT.
Okay, so Form 8840 is non-negotiable for that exception. #tag2, the fundamental difference in taxation. Right, so we've nailed down how you determine status. Green card or SBT, possibly with the closer connection out. Let's talk dollars and cents. What's the big tax difference once you know if you're an RA or NRA?
It's night and day. For a resident alien, it's pretty simple, if extensive. You're taxed just like a U.S. citizen,
Right.
meaning on your worldwide income. Everything you earn anywhere on the planet potentially gets reported on Form 1040 and taxed by the U.S.
Okay, worldwide income for RAs. What about non-resident aliens, the NRAs?
NRAs are different. They generally only pay U.S. tax on income from U.S. sources. And that U.S. source income falls into two main buckets. They file Form 1040 NR.
Two buckets. What's the first one?
The first is income, effectively connected with a U.S. trade or business. We call it ECI.
ECI. Sounds like work income.
Mostly, yes. The most common example is salary or wages earned for performing personal services while physically in the United States. This ECI is taxed at the same graduated rates that apply to U.S. citizens and residents.
Okay, so work performed here gets taxed progressively. What's the second bucket?
This is the one that often surprises people. It's called FDAP income, fixed or determinable annual or periodic income.
FDAP. That's a mouthful. Like what?
Think passive income from U.S. sources, dividends from U.S. companies, interest from U.S. banks, though some bank interest is exempt, rents from U.S. property, royalties from U.S. patents or copyrights, that kind of thing.
And how is that FDAP income tax?
It's subject to a flat 30% tax rate, not graduated. Just a flat 30%, unless a tax treaty between the U.S. and the NRA's home country provides for a lower rate or even an exemption.
30% flat rate.
Wow.
Is that usually withheld?
Often, yes. The payer in the U.S. is typically required to withhold that 30% tax before sending the money abroad.
So the difference is huge. RA, worldwide income, graduated rates. NRA, only U.S. source income, split into ECI, graduated rates, and FDAP, flat 30% or treaty rate. Getting the status wrong could mean paying tax on income you didn't think was taxable or paying at a very different rate.
Exactly. Which brings up the next critical point.
Yeah.
How do you determine the source of income, especially compensation if you work in multiple countries?
Right. If you travel for work, how do you slice up that salary?
The primary rule is the time basis rule. It's based on where you physically perform the services.
Okay, time basis. How does it work?
You calculate a fraction. The numerator is the number of days you worked inside the U.S. The denominator is the total number of days you worked anywhere in the world for that compensation during the year.
And you multiply your total pay by that fraction.
Precisely. That gives you the U.S. source portion of your compensation, which is potentially taxable if you're an NRA, or fully taxable if you're an RA, of course.
Let's use that Christina Brooks example from the guide. She made $80,000 total salary.
Right. And she worked 240 days total during the year. 60 of those days were working days inside the U.S. The rest were in the Netherlands.
So the fraction is 60 U.S. days divided by 240 total work days. That's 1/4.
Exactly. So 1/4 of her $80,000 salary, which is $20,000, is considered U.S. source income based on the time basis.
That seems clear, but wow, you'd need really good records of where you worked every single day.
Meticulous records are non-negotiable. Absolutely essential.
Okay, let's circle back to that group you mentioned earlier, the exempt individuals. Students, scholars, people on F, J, M, Q visas. You said their days often don't count for the SPT.
Correct. For a limited time, usually. Students on F or J visas, for example, are typically exempt from counting days for their first 5 calendar years in the U.S. Teachers and researchers on J visas are often exempt for 2 years. It depends on the visa and sometimes prior history.
That's a big benefit for avoiding RA status. But they need to tell the IRS they're claiming this, right?
They absolutely do. This is a critical filing requirement many miss. Every single person in the U.S. on an F, J, M, or Q visa status, even if they earn 0 income, must file Form 8843, Statement for Exempt Individuals and Individuals with a Medical Condition.
Form 8843. Even with no income.
Even with no income. This form officially tells the IRS why you're excluding your days of presence from the SPT calculation. If you don't file it, Technically, those days could be counted, potentially making you a resident alien unexpectedly.
When is it due?
If you have to file a tax return, like Form 8840-NR, you attach Form 8843 to it. If you don't have to file a tax return, the deadline for Form 8843 alone is June 15th of the following year. So for 2024, it would be June 16th, 2025, since the 15th is a Saturday.
Okay, Form 8843 is a must file for this group. Now, another big topic for them is payroll taxes, Social Security and Medicare, or FICA.
Right. There's generally good news here for the primary visa holder. NRA students, scholars, teachers, researchers on FJM or Q visas are usually exempt from FICA taxes on wages paid for services that are allowed by their visa status and conducted to fulfill the purpose of their visa.
Like on-campus jobs for students or research work for scholars.
Exactly. Or practical training like CPT or OPT for students. That's a significant saving, about 7.65% of their wages.
But I sense a but coming.
There's a huge but, and it catches families out all the time. This FICA exemption applies only to the F1, J1, M1, or Q1 visa holder themselves.
What about their dependents, spouses or kids?
Spouses and dependents, like those on F2 or J2 visas who might get work authorization, are never exempt from FICA taxes on their earnings. Ever.
Wow. So if a J2 spouse works, they pay full FICA, even if the J1 primary doesn't.
Correct. That needs careful handling with their employer's payroll department.
Okay, important distinction. What about scholarships and grants? Often tax-free. Right.
Sometimes. For degree candidates, a qualified scholarship is generally tax-free. But qualified is narrowly defined.
Meaning?
It only covers amounts used for tuition and fees required for enrollment or attendance, plus fees, books, supplies, and equipment required for courses.
What's not covered? What's taxable?
Anything used for room and board, travel, optional equipment, or living expenses. That portion of the scholarship or grant is taxable income.
And what if the scholarship requires work, like a teaching assistantship?
Then the part of the payment that represents compensation for services is always taxable wage income. It's not considered part of the tax-free scholarship amount.
So let's use the Maria Gomez example. She gets $2,500. Part is a grant, part is pay for teaching.
Right. If the university designates $1,000 as payment for her teaching duties, that $1,000 is taxable wages, subject to withholding, potential FICA if she's not exempt, etc. Only the remaining $1,500 is potentially excludable as a qualified scholarship, assuming it's used for tuition and required fees.
Okay, makes sense. Are there treaty benefits specifically for academics?
Yes, many treaties have provisions specifically for students, trainees, teachers, and researchers. These can be very valuable.
Like what?
For example, the treaty with India allows students who become resident aliens to still claim the standard deduction for a period, which NRAs normally can't. The treaty with China allows eligible students to exempt up to $5,000 of income from personal services each year. Teachers or researchers under some treaties can exempt their compensation entirely for, usually, 2 years.
Oh, that sounds great. Is there special paperwork to claim a treaty benefit?
Yes. If you're claiming a treaty benefit that reduces or modifies your tax under the Internal Revenue Code, you generally must attach Form 8833 Treaty-Based Return Position Disclosure to your tax return.
Form 8833. Got it. Any warnings about these treaty benefits?
A big one. They almost always have time limits. Students might get 4 or 5 years, teachers, researchers often only 2 years. You have to track these limits very carefully. Exceeding them can have serious consequences, which we should touch on later. #tag REFE. Key filing considerations.
Okay, let's shift to the practicalities of actually filing. If you determine you're a non-resident alien, you file Form 1040-NR. What are the filing status options?
They're limited for NRAs. Generally, you'll file as either single or married filing separately. You usually can't file as married filing jointly or head of household.
Okay, limited status options. What about deadlines? Are they the same as for residents?
Not always. There are 2 main deadlines for NRAs for a calendar year, like 2024, and it depends on whether you had wages subject to withholding.
Okay, what's deadline number 1?
If you did receive wages subject to U.S. income tax withholding during the year, your Form 1040-NR is due by the regular tax deadline, April 15th of the following year. So April 15, 2025 for the 2024 tax year.
Same as residents then. What's deadline number 2?
If you did not receive wages subject to U.S. income tax withholding, maybe you only had that FDAP income or business income with no withholding, then you get an extra 2 months. Your deadline is June 15th or June 16th, 2025 for the 2024 tax year because the 15th falls on a weekend.
April 15th with wage withholding, June 16th without. Good to know. Is there any way for a married couple where one is an NRA and the other isn't to file together.
Yes, there's a significant election they can make. If one spouse is a U.S. citizen or a resident alien at the end of the year, and the other spouse is a non-resident alien, they can choose to treat the NRA spouse as a U.S. resident alien for the entire tax year.
Choose to treat them as a resident. Why would they do that?
The main benefit is that they can then file Form 1040 jointly, married filing jointly. This often results in lower tax rates and allows them to claim certain credits and deductions that aren't available when filing separately.
So potential tax savings. But what's the catch? There's always a catch, right?
So there's a huge catch. If you make this election, the spouse who was originally an NRA is now treated as an RA for the whole year. And what did we say about RAs?
They're taxed on worldwide income.
Exactly. So by making this election to file jointly, the couple agrees that both spouses will report and potentially pay U.S. tax on their combined worldwide income for the entire year. That foreign income the NRA spouse earned before moving, or from foreign investments, it's now potentially subject to U.S. tax.
Oof. So you trade the simplicity and potential lower rates of joint filing for subjecting potentially a lot more income to U.S. tax. That's the decision to weigh very carefully.
Very carefully. It can be beneficial, but you need to run the numbers both ways.
Okay. Last point. What happens when someone is physically leaving the U.S., potentially for good? Is there a final tax step before they get on the plane?
Yes, for many departing aliens, there is. It's often called a sailing permit or departure permit, but the official term is a certificate of compliance.
Certificate of compliance. Who needs one?
Most aliens leaving the U.S. generally need one, although there are exceptions, like diplomats, students on F visas usually, and some short-term visitors. You typically get it by filing either Form 1040C or Form 2063 with the IRS before you leave.
Form 1040C or 2063. What's the purpose?
It's basically the IRS checking that you've paid or made arrangements to pay all the U.S. income tax you owe up to your departure date. You need to file it fairly close to your departure, usually at least 2 weeks before, but not more than 30 days prior.
So it's like settling your tax bill up to the point you leave.
Sort of. It's a compliance check for departure, but here's a critical point. Filing Form 1040C does not replace your annual tax return.
So even if you get the sailing permit, you still have to file your final Form 1040 or 1040 NR later.
Absolutely. The Form 1040C covers income up to departure. You must still file your regular annual return after the year ends to report all income for the entire calendar year and reconcile everything. The sailing permit is just a prerequisite for leaving for many people. Hashtag tag outro.
Okay, so wrapping this all up, the absolute core message seems to be, get your residency status right. Resident alien versus non-resident alien. Green card test versus substantial presence test. That single determination drives absolutely everything else in your U.S. tax life.
It really does. From what income is taxed, to which form you use, which deductions you can take, what deadlines apply, it all flows from that initial status classification.
And meticulous record keeping seems to be the other major theme, especially with counting days for SPT and sourcing income.
Couldn't agree more. And let me leave you with one final sort of cautionary thought related to those treaty benefits we discussed, especially for teachers and researchers.
Okay.
Some of those treaties have what are called clawback provisions. For example, a treaty might exempt a researcher's income for a maximum of 2 years if they stay and work even 1 day longer than those 2 years.
Let me guess. The benefit disappears.
Worse, it disappears retroactively. The IRS can go back and say, you exceeded the limit, so the exemption you claim for the entire 2 years is now void. You suddenly owe tax for both prior years plus potential interest and penalties.
Wow, that's brutal. 1 day over the limit wipes out years of benefit.
It can, depending on the specific treaty wording. It just underscores the absolute need to track your presence, your status, and the time limits on any benefits with extreme precision.
A powerful final warning. So the takeaways are clear. Understand your status, keep detailed records, and pay very close attention to the rules around your specific visa and any treaty provisions. Don't assume anything.
Well said. It's complex but manageable if you approach it step by step.